Hello, everyone. Welcome back to another episode of our channel where we dissect the economic circus unfolding around the globe. Today, ladies and gentlemen, we're zeroing in on the Reserve Bank of Australia's, RBA, recent decision to hold its key interest rate at a staggering 13-year high. Let's break this down, shall we? Australia's keeping its rates locked at 4.35% while the rest of the world is ready to chop interest rates like a lumberjack with an axe. If you think this is all some clever master plan to control inflation and avoid a recession, think again. We're talking about sticky inflation, a stubborn labor market, and contradictory fiscal policies that would make any sane economist hold their head in their hands. Add to that the global uncertainty rippling from geopolitical battles, perched precariously on the decisions America will make in their upcoming elections. Folks, we've got a lot to unpack here. Buckle up. Let's start with the basics. The Reserve Bank of Australia has kept its cash rate, that's the interest rate they charge commercial banks on overnight loans, stagnant at 4.35% for an entire year. To put that into perspective, it's higher than a baking cake in the oven, and the RBA doesn't look like it's ready to unstick the rate anytime soon. Despite core inflation easing from its peak in 2022, which was a stomach-churning 6.9%, it's still hovering at a rather toasty 3.5%. That's well above the RBA's preferred target of 2-3%, and judging by the RBA's latest estimates, it'll be mid to late 2025 before core inflation dips into that sweet spot. Australia is talking about inflation control in 2 years. But while waiting for inflation to behave like a good boy, who's considering the present-day cost of living crisis that's already gnawing through Aussie wallets? It's a long game, no doubt. The inflation curve has been resistant, like trying to flatten a piece of plastic with a feather. The RBA keeps repeating itself that it's not ready to cut rates. Why? Because inflation needs to be, sustainably, inside the target range of 2-3%. Until then, expect nothing. So, the RBA sits like a hawk on high, watching very patiently, but to whom is it being so patient? Folks, it's certainly not the average Aussie feeling the pinch of mortgages, debts, and rising costs. At this point, we need to zoom out and consider the broader context, the global economic scene. Australia's central bank is sticking to its guns when most central banks across the world have realized that the game has changed. Even the mighty Federal Reserve is signaling rate cuts these days. The Reserve Bank of New Zealand and others are already slashing borrowing costs to preserve their war-torn economies, but for Australia, no such thing. If you're expecting some courage from the RBA, brace yourself for disappointment. And yet, while these stubbornly high rates are putting the squeeze on local families and businesses, Australia's in a waiting game, a wait punctuated by the unpredictable results of US elections, the geopolitical thickets of China's relations, and the global balancing act. With Donald Trump giving it another go for the White House and rattling on about trade tariffs against China, Australia knows well enough that there'll be collateral damage, considering China is its largest trading partner. Now, here's where the real carnival begins. Despite all this hawkish interest rate talk from the RBA, fiscal policy in Australia is strutting in the opposite direction. Joe Public here is likely wondering, why does it feel like the government's gone on a spending spree? Well, congratulations, you're paying attention. Public expenditure in Australia is running hot. Su Lin Ong, an insightful economist at Royal Bank of Canada, pointed out that this government-led splurging is making it incredibly difficult for the RBA to do its job and tackle inflation. Let me paint this picture more clearly for you. When the RBA tightens monetary policy, meaning they're making it more expensive to borrow, the goal is usually to squeeze demand and therefore slow inflation. But when the government cranks up spending at the same time, it's like refueling the economy while slamming on the brakes. You want to go left. Fiscal policy yanks you right, and so the economy just keeps spinning in circles. And here's where the kicker lies. Australia recently introduced tax cuts and cost of living support measures, theoretically good intentions by the government to ease household financial strain. That's great for now, right? Sure. But someone's got to pay the bill in the long run. By 2025, Fitch Ratings predicts the Australian government will dip into a budget deficit, with falling commodity prices being one of the culprits. It's not rocket science, folks. Spend without constraint, rake in less, and soon you'll need to swipe the national credit card to keep everything afloat. Let's take a second turn. While public expenditure is revving the engines, economic growth has decelerated sharply. Tight monetary policy has, as expected, put the brakes on parts of the Australian economy. Yet, interestingly enough, the labour market is the RBA's glittering trophy. With unemployment stuck at a low 4.1%, the RBA maintains faith in its soft landing. That's the idea that the economy can cool without crashing outright. So, the RBA is doing its odd victory dance. Hey look. Growth is tanking but we still have jobs. Which is pretty much like celebrating because no one's fallen off the boat yet, even as water gushes into the hull. But peek under the bright surface of low unemployment, and you'll get a murkier story. Jobs may remain plentiful, but at what cost? Wage growth has been sluggish at best. Australians are holding down jobs, but it's hardly enough to deal with record-breaking rent prices, stubborn inflation, and chronic underemployment. Moreover, excessive optimism in labor by the RBA masks the incoming storm clouds. The glow of low unemployment today might not withstand the pressures of financial stress, stagnant wage hikes, and shifting global demand dynamics if the export sector weakens or Chinese consumption falters. Finally, and this may be the most significant of all, Australia stands square in a sea of international uncertainty. This global economic chessboard is becoming ever more complicated. We've got the specter of Donald Trump rising again in the US, with his populist shouts for protectionism and tariffs on China. For Australia, this is serious. China is not just a neighbor in the Asia-Pacific region, it's Australia's #1 trade partner. These two share deep connections in terms of raw materials, energy, and agricultural goods flows, connections that the Australian economy would rather not put at risk. But Trump's return to the White House would inevitably come with his signature approach of economic brinkmanship. The same brash policies that caused market tremors years ago would crop up. We can expect another move towards economic nationalism, another shot at decoupling from China, and by extension, ripple effects into Australia. If Trump walks back into power, expect higher tariffs on Chinese imports, which could impact various Australian industries from mining to agriculture. While Australia hasn't shown any inclination to cut its ties with the Chinese market, geopolitical tensions could force its hand in uncomfortable ways. And it's not all about Trump. Across the globe, geopolitical uncertainties are mounting. Look at Europe, burdened with its ongoing energy crisis and inflation battle, and then there's the emerging markets, struggling under the weight of a dollar-dominated financial system. Australia is certainly not immune to these global tremors. So where does this leave Australia? Well, the RBA seems perfectly happy being an outlier on the global central banking spectrum, stubbornly hawkish as public deficits gather like rain clouds on the horizon. The government keeps pumping money into the economic engine just as the RBA is desperately trying to slow it down. This contradiction is like driving with one foot on the accelerator and one on the brake. It's unsustainable, and ultimately, something has to give. Meanwhile, the global order itself is shifting. Rising geopolitical tensions, risky moves in trade policy, and unpredictable elections in major economies like the United States only add to the uncertainty. Australia could soon find itself swept into the storm, unable to right the ship if global exports fail or conflicts escalate. And that wraps up today's analysis. Australia's dancing around a minefield of internal contradictions, trying to stick a soft landing while external threats loom ever larger. How will it end? Only time will tell, but one thing is clear, the path forward is nothing short of perilous. If you enjoyed this deep dive, give this video a thumbs up and subscribe. We'll continue to break down complex economic trends in digestible ways so you can stay ahead of the curve. Until next time, take care of your finances, prepare for the unexpected, and don't believe everything your government tells you about economic stability.